Joining us for a conversation is Judson Coulter of Rover Metals, an emerging energy company. Mr. Coulter, thank you for joining us today, sir.
Maurice, it's really a pleasure. Love being back with you again today. Thank you.
Well, it's a pleasure to be speaking with you today as Rover Metals has just completed a stock rollback finance opportunity and has an important update from the newly acquired Let's Go Lithium project in Nevada. Before we begin, Mr. Coulter, please introduce us to Rover Metals and the exciting opportunity the company presents to shareholders.
Yeah, Rover Metals, we've recently pivoted into critical minerals and specifically lithium, zinc, and copper. And our 12-month operating focus is development of our Claystone Lithium project, the Let's Go Lithium project, as we know it, in the state of Nevada. And we're really excited about working on that and, just getting a new base of shareholders within a really important, EV sector as we look ahead to 2023.
Well, speaking of lithium, I'd like to begin today's discussion at the 10,000 foot level as the lithium carbonate price has been soaring since 2021, far outpacing other critical and precious metals. What is causing the price movement and what can you share with us regarding the macro supply and demand forecast?
I just first of all, the first question there is, I think it's China's grip on world production, I think that in terms of forecast, I don't see the geopolitical environment changing anytime soon. Unfortunately, the United States only has one single producing lithium mine, and I think in the next 3 years that will change, but certainly it's not going to change at the pace of EV adoption. If you're looking at all the new vehicles coming out in 2023, there's going to be, the supply, sort of simple economics, demand supply is going to continue to drive a high price on lithium carbonate. And, I think what's really exciting is, Rover's just gone from being in a space of precious metals where there was hundreds, if not thousands of publicly traded companies operating in that space, to now in the Nevada lithium space where there's literally just a handful, six or seven of competitors that, even if all of us went gangbusters, in terms of, getting to the production stage, I still think that there'd be a shortfall of lithium carbonate. So it's a good space to be in. The smart money is already, looking at our later stage competitors. I go down the list and there's $30 million in cash on the balance sheet of these later stage companies that are in the claystone space in Nevada. So early days still for Rover, but we do have big plans for 2023 in terms of exploration and drilling for this lithium project.
Now, within lithium, there's two types. You have brine and claystone. For our audience members that may not be familiar with lithium brine and lithium claystone, what are the differences?
So the number one issue with brine, which is the traditional way of mining lithium, is it's an incredibly water intensive way to mine lithium. And obviously, look at the Western United States and even Canada now with climate change and drought. Anything that's water intensive, sort of is counterproductive to the green energy space that really we're trying to be part of that ecosystem. And so looking at alternatives that don't use as much water, which is the claystone lithium space, that's what essentially differentiates itself. Sulfuric acid, as an example, is used in the recovery process of just getting lithium out of claystone. And it's still fairly proprietary, and I'm certainly not a metallurgist or a geochemist to talk about how they're refining lithium carbonate from essentially recovered lithium from claystone. But I know that it works because we're obviously following very closely the industry and our neighbors and our competitors, and these companies are at the pilot processing stage, and they've shown that it works and it can be done. Battery grade lithium carbonate is 99.5%. And we've just seen some news releases in the last couple of weeks where, these lithium claystone companies that are 6 or 7 years ahead of us are recovering it at a rate of 99.94%. So, I think this is a really exciting breakthrough industry, being in claystones.
Well, speaking of claystones, let's go to Nevada and let's visit the new addition to the Rover Metals Property Bank, the Let's Go Lithium Project. Does it host claystone or brine?
It's a claystone lithium project. And what's really exciting about this project is, for one, I'm just shocked that it was available. Like, I just really, part of it, I think, is the reason is there's only 6 or 7 mining companies operating in this space. But there's been water wells that were drilled on the project that show an average ore body thickness of 300 feet. And we've got multiple at surface. And, we sort of, the drill targets that we've designed are, sort of up to 60 meters. I know I'm going feet to meters, but it's just because a lot of mining investors still think in meters. So the drill program is sort of up to 60 meters, and we think it starts at sort of 10 meters below surface. It's your typical Nevada desert where there's sand and desert dust that it's kind of blowing over surface. But that being said, we've still pulled some very high grade samples right at surface, up to 1,200 parts per million lithium, which, if you do a general Google search on lithium 101 on the internet, 680 ppm lithium is sort of considered in the high grade territory. And the average grade of these resources that other companies are publishing in technical reports is, it's saying like sort of 800 to 900 ppm for lithium carbonate, or sorry, for claystone lithium is sort of a very good average grade to have on a resource. So we're getting some really good smoke at surface. And this project also has roads, a nearby town for available workforce, and there's already hydro lines right on the project. So if just looking at, I guess, mining investment 101, going through the infrastructure list, green energy, hydro, roads, available labor, like, check the boxes, because it's not in Timbuktu, the middle of nowhere. This is right in a great mining state of Nevada too. So I just think it's got the ingredients for success, for our company. So
Yeah, those are some significant competitive and cost saving advantages that you have over your peers. And to be in a great mining jurisdiction of Nevada, all kudos to you, sir.
yeah, just in terms of, I cut my teeth obviously with our gold assets in Northern Canada. That's the legacy of Rover, working in Northern Canada, where our drilling costs were $800 Canadian to $1,000 Canadian per meter, and we've just cut our operating and exploration expenses by 80%. So now this upcoming drill program that we budgeted for is literally $200 Canadian all in. And you got to love that. It's really, I think, giving us, like, I'm basically like waving my hands to investors, like, give me the ball, let me score a goal here, because I just think we can do a lot of damage with, a reasonable financing budget, to do some exploration. I think we could do a lot of damage. I've got a track record, and our management team has a track record of raising millions of dollars. And, we've put about $5-6 million into exploration and to our gold projects in Northern Canada. We need a fraction of that in the early days for this claystone lithium project. I think, honestly, I'm really excited. I think it's totally in our wheelhouse. Great jurisdiction. Love working down in Nevada. I've been down there several times. I think it should be a good fit for our company.
Well, you referenced financing. Can you give us the details of it?
Yeah, so obviously we've just recently done a share consolidation, and that was necessary to set us up for this financing. Like the investors, the smart money, sort of sophisticated mining investor knows that we're going into a phase 2 drill program on this lithium project. So there's a structure that's expected and a price point that's expected. And so we adjusted accordingly. I mean, also just by the legacy gold projects that we own, those still need expanded phase 2 drill programs. And so it's just a realistic sort of pro forma. If you were to look at the life cycle of a junior mining company, going back to 26 million shares outstanding, wanting to raise a financing at roughly 9 cents Canadian, 10 cents, depending on sort of how trading. We just started trading on a consolidated basis on Monday, so we'll just see sort of where the chips settle with the market on the exact pricing of that financing. We're raising up to $800,000 Canadian. I'd sort of touched on the fact the use of proceeds is for drilling in Nevada. But I think what's really unique, I think, about the opportunity is there's U.S. military money available for critical minerals development in the United States, and lithium is right at the top of that list. So what we hope is that this is not going to be a scenario where we have to come back to the market every 12 months to raise more exploration capital. The hope here is that we're able to finance, the target of 800,000, and then really just, invest into the relations that we need to build in order to source that, that government capital for development. And obviously we have to show good drill results, and that'll be part, I think, of the recipe of success for, that kind of future financing. But certainly we're within the right space moving forward.
Well, I have confidence in your meta leadership styles and as a team. And I'm also curious here on the financing, is there a warrant?
Yeah, that's right. So it'll be, so as I sort of mentioned, 8 or 9 cents Canadian per unit, and the unit offering will carry a full warrant, good for 2 years.
Awesome. We'll take it.
Yeah, I mean, and I just think, really look at what I encourage the listener, to really look at Biden's Inflation Adjustment or Reduction and Energy Act. I think it's called that's literally what the name of it is, Inflation Reduction and Energy Act. And within that, the tax incentives that are passed on to, essentially the automakers, Tesla included. I was going to say the big four, but, big five, I guess, with Tesla. Their supply chain manufacturing credits and their individual consumer tax credit are based on these companies buying 30% of their lithium from a NAFTA country starting next year, and then that scales up, to in 2027. I think that scales up to 80% has to be sourced locally. So, that means that the value of the project that we have is really only going to increase as we move forward. And I just think that it's a good sector. If you're not in the space, this is certainly something you would want to have in your investment portfolio. If you're a diversified investor, having a Claystone Lithium company, I think it's a good place to be.
Mr. Coulter, if I'm an accredited investor, what's the next step I need to take?
Yeah, I mean, just go to our website and they can contact us off of our website. That's info@rovermetals.com.
In closing, sir, what would you like to say to shareholders?
Thanks for, sticking with us. And, obviously, the market has, it's across all sectors has been a bit of a bumpy ride the last 6 to 9 months. But, we've pulled ourselves up by our bootstraps and doubled down on, where we think we can really bring growth to our shareholders and new shareholders as well. I mean, I really believe in the opportunity, and I think we're well aligned for success.
I like the resiliency. Last question, sir. What did I forget to ask?
Oh, I think we covered it today, Maurice. Thank you.
Mr. Coulter, it's been a pleasure speaking with you today. Wishing you and Rover Metals the absolute best, sir.
Hey, thank you so much.
The information presented on Proven and Probable is provided for educational and informational purposes only, without any express or implied warranty of any kind, including warranties of accuracy, completeness, or fitness for any particular purpose. The information is not intended to be and does not constitute financial, investment, or trading advice or any other advice. You should not make any financial, investment, or trading decision based on any of the information presented without first undertaking independent due diligence and consultation with a professional broker or competent financial advisor.